Hi, good afternoon all. Welcome to Phillip Trading Podcast, and I'll be the host for today. So my name is James. So today's we're glad that we have Trent with us. So how are you being, Trent?
I'm feeling good today. Good to be back.
All right, good. Okay, so today's last week we shared about US crude oil products. So today's we will also share about US product, but today we would like to share about gold futures. So today's topic is hedging market volatility with CME Micro Gold Futures. Okay, so I have prepared some of the questions to ask Trent about the gold futures view. Okay, so first, what is the difference between micro gold futures and gold futures, Trent?
Okay, so actually both futures have the same underlying asset, which is gold, and their settlement method is through physical delivery. So the main difference is the size of the margin. So micro gold futures are actually 10 times smaller in margin as compared to the gold futures, which allows traders with smaller capital to participate in the gold market. In addition, gold hedgers can precisely scale their exposure in gold up or down with the micro gold contracts. So for businesses such as gold producers who have exposure in gold and would like to hedge during a market downtrend, micro gold contracts would be the perfect tool to do so. As these contracts are smaller in size, traders with smaller exposure can precisely hedge their portfolio without the worries of overhedging as compared to using the traditional contracts.
I see, that's good because some of the investor might have the initial capital concern, so they maybe can try for this micro gold futures. All right, so normally, what are the factors investors should look after before they enter into the gold market?
Okay, there are actually a few factors affecting gold prices. One of them is the value of the US dollar. So the price of gold is generally inversely related to the value of US dollar because the metal is dollar denominated. All else being equal, a stronger US dollar tends to keep the price of gold lower and more controlled, while a weaker US dollar is likely to drive the price of gold higher through increasing demand. This is because more gold can be purchased when the dollar is weaker. Then another factor is central bank reserves. Central banks hold paper currencies and gold in reserve. As the central banks diversify their monetary reserve away from their paper currencies that they've accumulated and into gold, the price of gold typically rises. Many of the world's nations have a reserve that are composed primarily of gold. Then other than the two factors above, gold price is also affected by worldwide jewelry and industrial demand. So jewelry account for approximately half of the gold demand, which total more than 4,400 tons, according to the World Gold Council. India, China, and United States are largely consumers of gold for jewelry in terms of volume. Another 7.5% of demand is attributed to technological uses for gold, where it is used in the manufacturing of medical devices like stents and precision electronics like GPS units.
I see. Okay. So since gold futures are in the trend of sideways as my observations, so when is the good timing to enter gold futures for now? Yeah.
Okay, so from a fundamental standpoint, gold price is currently easing off as the dollar held gains ahead of the much anticipated US jobs data, while a growing number of Federal Reserve officials signal the possibility of a sooner than expected policy tightening. Fed Governor Christopher Waller said it may be possible for the US Central Bank to start withdrawing its accommodative monetary policies sooner than some expect, given the progress in economic recovery and also the improving labor market. So actually, investors are now focused on US non-farm payrolls report, which is due on Friday, seen as the key to Fed's policy stance. Then from a technical standpoint, gold is currently trading in a range between 1,790 and 1,830. So hence a break above the 1830 level, we can expect gold to resume its uptrend. If a break below 1790, we can expect more weakness in gold price.
Okay, I see. Okay, so any of the potential risks to the gold market in the coming months that investor need to look after? If let's say we got some of the investor might have the interest to trade gold, so can you share some of the potential risks about these products?
Okay, so apart from the monetary stance from Fed, investors should also monitor the COVID-19 situation in US. Currently, daily new COVID-19 cases have climbed to a 6-month high in the United States, with more than 100,000 infections reported nationwide, as the Delta variant ravaged the states with lower vaccination rates. Minneapolis Fed President Neil Kashkari said that the Delta variant of the COVID-19 could throw a wrinkle into the labor market recovery and the timeline for reduction in Fed's asset purchase program. So overall, investors should really pay close attention to the COVID-19 daily cases in the US.
All right, okay, I see. Yeah, I think that's all for today. So thanks for your great sharing, bro, and appreciate all the time too. Okay, I believe our audience has learned a bundle of information regarding to this gold market. And okay, since there's an opportunity in gold, okay, so guys, don't just observe, okay, try to kickstart your future trading with us. Okay, yeah, so for those who haven't have the account, you can try to contact us to open account with us. And yeah, a good news for all our attendees and also the audience here is we join our ongoing promotions, because now we have ongoing promotions called To the Moon with CME Micro E-mini. Yeah, so our investor can trade all of these micro contracts, like we got the Micro E-mini Dow Jones, S&P 500, and also E-micro Gold, and so on, okay, with just $2 per lot. Yes, it's just $2 USD, okay, per lot. Yeah, so if let's say you got any of the questions to ask about, to know more about this information, you can contact us, okay. Yeah, so once again, thanks to Trent by sharing his view on gold market. So if you are watching our podcast, okay, so please share these sessions on your Facebook wall and share to all of your friends who would like to keep in touch, embrace to the gold market and also the futures market. Okay, yeah, so stay tuned for our next week podcast. Okay, we'll see you soon. Okay, thank you, bro. Bye.
Yeah, thank you. Bye.
Okay, bye.